what effects do tax cuts have on small and growing firms? What can Sweden learn about this from the large corporate tax rate cuts implemented in Finland some 10 years ago? And more generally, what policy tools are effective for incentivizing small and growing small firms to invest and grow? These are questions that we will soon dive into during this release seminar for our new report, Do Corporate Tax Cuts Boost Small Firms?, which is part of SNS research project Taxes in a Globalized World. And we released it today. We have both Swedish version, which I have here. I don't know if you see it. In Sweden it's called Gynna småföretag av sänkt bolagsskatt. But we also have an English version, and this seminar will be conducted in English. The report is written by 3 Finnish economists, Jarkko Harju, Aliisa Koivisto and Tuomas Matikka. And we are very happy to have Aliisa and Tuomas with us here today to present their work. To discuss the report and its policy implication, we have also invited Tora Hansjons, State Secretary to the Minister for Finance, Persson, Economic Policy Spokesperson for the Liberal Party, Krassén, Tax Policy Expert at Swedish Federation of Business Owners, Företagarna, and Hans-Peter Larsson, Head of Taxes at FAR, the Institute for the Accountancy Profession in Sweden. My name is Ilinca Benson. I am Deputy CEO at SNS, and I have the pleasure of chairing this seminar. A very warm welcome to all of you who participate in the seminar, and I strongly encourage you to contribute with your questions to the discussion. You may do so by writing them down in our Q&A function in order for my colleague Emily Lekebjer to be able to present them to our speakers during the session. So now I would like to hand over to Aliisa Koivisto to present her and her co-workers' studies of the effects of the Finnish tax reform. Aliisa Koivisto is a research associate at UNU-WIDER in Helsinki, Finland, and was previously a researcher at VATT, the Institute for Economic Research in Finland. Very warm welcome, and I hand over to you, Aliisa.
Thank you so much. And thank you everyone for joining this webinar, also from my behalf. So, as already said, this work is co-authored, so Tuomas will join the panel later, and also Jarkko Harju has contributed to this research. And I will get straight on with this. So, as a bit of a background motivation for why we started to study this topic, so I know this is an expert audience, so you all know that cutting business taxes is viewed as a relevant policy tool for boosting firm investments and growth. Hence, many developed countries have been reducing their corporate tax rates during the past 2 decades. However, the discussion around corporate tax cuts has been mainly evolving around international tax competition and, for example, the impact of corporate taxes on profit shifting of multinationals or investment location of multinationals. And I think small firms have kind of been left aside from this bigger public debate that has been evolving around this international tax competition. So yet small firms and entrepreneurs, they play a vital role in creating new jobs and innovations that might not otherwise exist, and hence contribute to the welfare in the society. Moreover, they might have less opportunities to avoid corporate taxes by, for example, profit shifting. So we wanted to study how do these small firms and growing firms respond to corporate taxes, and what is namely the impact of cutting corporate taxes on these firms. So in our report, we summarize and discuss a study where we studied the effects of 2 large corporate tax cuts that were implemented in Finland in 2012 and 2014. And first, in 2012, the corporate tax was cut from 26% to 24.5%, and finally to 20% in 2014. And this tax cut was actually not just a corporate tax cut, but it was implemented together with a dividend tax increase. meaning that the tax burden was kind of shifted from the firm level to the owner level. So the owner level effective tax rates, which means the corporate tax on profit plus the dividend tax on the distributed profit. So this joint tax rate was kept unchanged after the reforms. And this, of course, makes the tax cuts also very kind of policy relevant, as this might be something that also other countries have been implementing or might consider implementing while they feel the pressure to reduce the corporate level tax burden. And so we focus on the impact of this tax reform on investments and economic performance of small and young firms. And we use data that covers all Finnish firms, and it doesn't just cover corporations that were affected by this corporate tax cut, but also other corporate firms, and namely partnerships that we then use as a control group to study kind of how would things have gone if there was no tax change at place. So partnerships are not affected by the corporate tax cut because the profits of partnerships are taxed directly at the owner level. So first, I'll go to the results on how did investments of small corporations respond to the tax cuts. So in this figure, I've kind of included both a bit of about the method and also about the results. So the figure plots the development of investments relative to capital assets across the time period studied. So the horizontal line is the time and the vertical line is the investment rate. And in this research setup, we call the method difference in differences. The very kind of key assumption for this method to be feasible is that the pre-trends of the both groups, the so-called treated groups, so the corporations and the control group partnerships, needs to kind of follow each other so that we can assume that there is some comparison available. So as we noticed from the graph, the trend before the reforms for the both corporate firms was fairly similar. So both faced after the financial crisis, the investment rate started decreasing and the shape is very similar. And statistically, this was similar. So there was no statistically significant difference here. Furthermore, when the tax cuts were implemented, these two vertical lines denote that time. So after the tax cuts, the difference between the groups stayed the same. So still, even after the corporate tax cut, there was no the investment rate of corporations. So the lighter blue line has not increased. So as if it should have happened if we would expect to see increase in investment. So what this figure tells us is that we find no significant investment response on the aggregate level to the tax cuts among small firms. In addition, if we use different parameters to study investment responses, namely, for example, the share of firms that had positive investments, we do not find any impact. However, we do still want to kind of dig deeper into the data as we have a very rich data. So we do this so-called heterogeneity analysis to study whether there would still be something going on for example, some subgroups of firms. And indeed, we do find a positive response of 3.8 percentage points for firms that are relatively young, so younger than 10 in our data compared to older firms. And this actually suggests that younger firms, that while on the average, we do not observe any responses in investment, it still suggests that younger firms could be more responsive to increasing their investment when the corporate tax burden is reduced. Furthermore, we study firms with different available cash resources. So as you know, the cash constraints of firms is can be a very defining feature for firms on how they can take up new business opportunities. So when we divide our sample of firms into two groups based on the median cash resources, so cash to assets ratio namely, and we find that those with lower cash to assets ratio actually responded slightly more positively to the corporate tax cut in terms of their investment, suggesting that this cash injection that was induced by this corporate tax rate cut could alleviate cash constraints among these firms. So while on the average level, the investment responses were really modest, as we didn't observe anything on the average level, there's still this cash injection to the firm. So the after tax revenue increased for these firms. So there could be also other responses, namely on other business outcomes. So we studied also the sales and variable costs and the labor costs and value added of these firms. And with variable costs, I think other variables might be clear for you, but these variable costs, these refer to material inputs, kind of these materials and kind of input spending that the firms have. And value added, that's, well, what you count the value added tax from, so sales minus the variable costs. And so when we study these other outcomes, we actually do observe something. So again, for this setting, it's important to check the pre-trend. So again, we noticed that these corporations and partnerships, their sales and these different outcomes evolved really similarly before the reforms. And so this makes our research setup credible. And we noticed that actually after the tax cuts, the sales of these corporations that were affected by the tax cut actually is on a slightly higher level, as well as the variable costs evolved more positively for the corporations. However, we do not observe any significant responses for labor costs or value added. So in magnitudes, what this means is that we observe an average of 1.6% increase in sales in comparison to sales in 2011 after the tax cuts, and a 2% increase in variable costs. And the effects on labor costs and value added were not significant. And again, to kind of study the mechanisms behind these responses, we again do this heterogeneity analysis based on different subgroups of corporations. And for these outcomes, we find that the most important kind of defining feature of these firms that responded strongly was that they had an active owner manager. So we find that these sales responses are clearly larger among firms that have an active owner manager. Active owner manager in this case is a definition based on the Finnish pension insurance system. So it means that the owner owns at least 30% of the firm together with family members, and holds an active leading position such as an CEO or head of the board. So they're insured for their pension as entrepreneurs. And we find that these firms that have had such an owner have responded very strongly and in comparison to firms with more passive owners. Interestingly, the investment rate did not differ between these groups. So this was really seemed to be for other reasons than the investment response. Furthermore, we find that the effects were slightly larger for firms that were more cash constrained in comparison to less cash constrained firms. And so a bit of discussion about these results. So this, in the first thought, for some this might feel a bit unintuitive, an increase in sales without an increase in investment on average. Especially given that there were no change in the owner level tax burden. So usually when we think of the incentives, for example, for putting more effort into the firm by the owner, we think of the owner level tax burden, but in this case, the owner level tax burden was not changed. But however, when you think about this tax cut, then actually this corporate tax rate cut, even with the dividend tax increase, it does create a mechanical cash injection into the firm through these increased net of tax retained earnings. So these cash resources could be particularly relevant for smaller firms that could have limited opportunities to acquire funding from other sources, but still might have new business opportunities to utilize. However, our evidence does not support that cutting the corporate tax rate would be a very relevant or effective tool for increasing investments among small firms. But of course, there might be many reasons behind this. For example, the capital intensity of these smaller firms. Okay, thank you. This was my presentation.
Thank you very much, Aliisa. And well, I'm very intrigued by this study and would like to ask you some questions, and also, of course, encourage you in the audience to write down your questions so that we can present them to Aliisa and then later also the other speakers. But I would like you maybe to elaborate a little bit more on your findings, that, or how would you value these findings that the younger firms are more responsive to tax cuts than the older firms, and the same is true also for firms that are more cash constrained. What can policymakers, if anything, take away from these findings?
I think, of course, like creating a positive, that even with this kind of tax cut that was not necessarily like targeted to incentivize younger firms, but still it seemed to have an effect for younger firms. It kind of underlines that that creating a positive business environment for new firms or firms to start their business is really important, and even like small like these. Well, this was relatively large tax cut, but that with different incentives, you can actually have an impact on these smaller firms and younger firms.
And I mean, the figures that you state are 3.8 and 3.4 percentage points. How is that much? Is that little? I mean, it doesn't sound so much, but mainly on the margin, it is a lot. I don't know. What would you say about that?
I would say that these are quite a lot, because sales, that's not the same as, for example, profit. So sales on like in terms of magnitude in euros, I would say the effect is in euros a lot. But we actually did estimate also elasticity. So in that you can kind of calculate how the sales, for example, respond to the tax cut. So in that sense, I don't have the numbers here for the elasticity, but I would say the effect is still significant. However, the investment effect, even for these smaller subgroups, I would say that's very, very small in comparison to earlier literature that focuses on larger firms, on more capital-intensive firms, and firms that are operating on like international markets. And I think these earlier literature studying and very different sort of tax incentives, they find very strong investment effects. So I would say that while the effect on sales on our study can be said to be relatively large, however, there's not much literature about that. The effect on investment is like very, very small.
And I would like to ask a follow-up question on that, the distinction between investment and maybe costs for these kind of companies. As you say, maybe they aren't that capital intensive. Could you elaborate a bit about this? Well, the distinction between investments and costs and sales effect for these kind of smaller firms that maybe don't do such a lot of big investments in machinery and those kinds of stuff that cost a lot of money, and you invest over a longer period of time.
Yes, exactly. I think this is kind of an important point as well to think about in also in this wider debate about taxes and what you actually want to incentivize firms to do, because in modern times, I think a lot of the value that firms do comes from, for example, from what people do, like what their like human capital investment in some sense. But these are not things that are measured in typical investment into capital. So I think this study also underlines that that we should also think about other margins when we study firms and study responses to tax cuts than just investment to fixed capital. Because I think, for example, Sweden is also has a lot of like growing firms that that their business is not really about fixed capital. I don't know, say some technology firms that produce software, for example, then these are not necessarily the margins that we even need to study this fixed capital investment. Yeah.
Yeah, and then I have another question about the method and the control group. Could you tell us a little bit more about the control group that you use, and also how good a fit they are to the corporation, to the small corporations that are your treated group?
Yes, so they are actually, even though I motivate this study that it's important to study small firms, but part of the reason why we studied small firms is that for these we have a suitable control group. Partnerships are a relatively common corporate form in Finland, while corporation is the most common. However, among largest firms, so multinationals, so these really big firms, the partnerships are not that common. So that's one of the reasons that we didn't study a lot bigger firms, is that for them the setting would not be as fit. These both corporations and partnerships, they operate on similar businesses. So they can be like smaller retail shops, they can be like truck drivers, or these kind of, for example, smaller logistic businesses, and they operate in same industries. The industries are represented a bit like there might be different weights among the groups, but we've corrected in the those different kind of industry weights that there might be between the groups. We've corrected those with applying these weights in the method that we use. But other than that, among these like smaller firms, I think partnerships are still a relatively good control group for corporations. Well, of course, now that the taxes for corporations have been evolving so favorably in comparison to partnerships, I could imagine that in the coming years and also in the past few years, corporations have been a more popular group or business firm for new firms that are only starting their business. Yeah.
Okay, thank you very much, Aliisa, and I will come back with more questions during the panel discussion, but thank you for now. And now I would like to invite Hans-Peter Larsson and Patrick Krassén into the screen. And Hans-Peter Larsson is, as I said, head of taxes at FAR, the Institute for the Accountancy Profession in Sweden. FAR has 5,000 members and 1,000 associate member firms. And Hans-Peter is also representing FAR in the reference group that follows SNS research project Taxes in a Globalist World. Very welcome, Hans-Peter. And Patrick Krassén is tax policy expert at Swedish Federation of Business Owners, Företagarna. And this is an independent, non-partisan organization that represents the interests of its members, who are also the owners of the organizations. And these are around 60,000 business owners in Sweden. So very welcome to you too, Patrick. And I would like to start by asking you to reflect on the report and also on the research's conclusions. Hans-Peter, would you like to start off?
Yes, thank you. And first, thank you very much for picking up this important and relevant study, this topic. I would like to start by answering the question in the title of the report with yes, even though it might not show in this study very clearly. And the reason I would still like to answer it with yes is that I think this issue should be put into a broader context, a longer period of time. And I started working in 1990, and at that time, the corporate income tax in Sweden was 52%, and we even had an extra profit sharing tax of 6%, worst case or highest level was 58%. Since then, we have gradually taken that down, changed our corporate tax income system, and now it's down to 20% plus. So it's another it's another ball game now. And what has happened during these 30 years? Well, now we have a lot more entrepreneurs in Sweden. We have a startup scene that is very good. Well, you have that in Helsinki as well. And also the service sector has grown. So I think you have to put all this into that context, the development of the general business climate for SMEs, where the corporate income tax level is a very important part. So that's the broader context that this study should be put in, I think.
Thank you, Hans-Peter. Patrick, what are your initial reflections?
Well, thank you kindly for the invitation to comment on this highly interesting report. As it lines out, this area has not been the focus of a lot of research, but it remains a very vital point of interest, because very many countries, Sweden and Finland included, are looking for policies that can boost or in some way strengthen the SME sector. We tend to focus on the job creating part of firm growth. Our organization repeatedly points out that 4 out of 5 new jobs in the Swedish economy since 1990 have been created in small and medium-sized enterprises. So when it comes to job creation, these firms, and especially the fast-growing ones, are highly important. But job creation is not the only measure, of course, of economic activity. The profitability, for example, of firms and their ability to survive and grow beyond just the small size or medium size to become even bigger firms or international firms is another interesting aspect, which is hard to capture. I would say about this study that it is very interesting, but it raises a couple of questions. One is the possibility to determine the causal effects of, for example, corporate tax level cuts, and to see whether that is the actual causal effect on small businesses, or if there were other changes at one point that were made that had other effects. In Sweden, for example, the required capital to start a corporation has been lowered in several steps, and the audit requirements have been lowered as well at the same time as the corporate tax rate has been cut. And a bit earlier, the tax rate on dividends to owners was reformed and lowered as well. So there are, I'd say you have to take probably a broader view on the business climate, and also take in various legal changes that were made at the same time to have a more multivariable analysis to capture the actual causal effects. That being said, I do think that the corporate tax cuts that have been made in Sweden and the Nordic countries have been very much driven by a need to be internationally competitive, not just when it comes to the multinational firms, but also the small and medium-sized enterprises. We live in an internationalized economy, and that affects even the smaller firms as well. And we have to stay very competitive in not just a European, but also a global sense.
But how do the corporate tax, because it's very interesting that you take that up for the smaller firms. I mean, I think that when it comes to larger companies, you think that if the corporate tax rate is high in one country, they can move to another country. But do the smaller companies have the same option?
Well, not in the same sense, but it does have an effect, for example, for the owner-led companies. In Sweden, the taxation of owner-led companies has been, in the last 20, 30 years, quite dramatically changed, with the double taxation that the corporate income tax and the dividend tax constitutes, being both of those rates being a lot lower now than in the early mid-90s. So that has an effect for the incentives to start and build owner-led businesses. And we can see that during the last 3 years only, 170,000 new corporations have been founded in Sweden. So the legal and economic environment and tax policy being a very important part of that is vitally important.
I mean, you have both touched upon the fact that the corporate tax rate have been substantially lowered during the last decades. Would the further cuts make a difference?
I can jump in here. Yes, I think so. We've followed a very positive path here. And with the service sector growing more and more up here, we're also more sensible to cuts in corporate income tax. And as the study show here, that sales have gone up here, which is a positive result. And I don't really know how you have measured investments, what kind of investments, but with in the startup scene and the service sectors, I mean, costs, investments in markets. So yeah, costs can be investments, and maybe that is what is being shown here. So to get further away from what we had 10, 15, 20 years ago, when these investments were made via Cyprus or whatever, now that it's not a ball game now. Now investments are being made through Swedish companies that you have close to. So a lot of tax planning that I also grew up with, it's gone for a very much less tax planning now, because the value of the planning gets lower with the lowering of the corporate income tax. So I definitely think that's a way we should continue, and maybe lower it by another 4 to 5% before yes, everyone is aware of the EU minimum income tax will maybe lock the scene, and most likely we will see rules like that. But for a small company, for a small country, we have to have these very positive environment up here.
I would just like to add,
Patrick, I would like you to answer, but also I would like to give a follow-up question to you.
Yeah, sure.
If you, I mean, answer the question about taxes, but also elaborate a bit on your more general view of the business environment for smaller firms in Sweden, where, of course, taxation is one part. I mean, is it favorable? What needs to be done?
Yes. Well, firstly, regarding the first question, I think it's important also to look at tax incidence. So in economic theory, tax theory, there is a theory regarding the corporate income tax that it's not actually borne by the corporation, that it's further passed on to owners, customers, investors, and so on. And this tax incidence theory is important, because if one were to take this study that we have today and flip it around and look at who bears the costs, or what is the effects of corporate income tax increases on smaller firms, that would be also very interesting to look at which activities decrease in small firms if the corporate income tax is raised. That also has bearing on the business environment. And as to the broader question from you on the business environment, I would say that we've taken many steps in the right direction when it comes to tax policy and other legal measures. Something that is still a problem in Sweden, as in many developed countries is the regulatory burden, which is hard to measure in actual numbers. But we see that the sources of regulatory burdens that are the regulatory burden that is more burdensome for small companies, the sources are more numerous. It used to be only perhaps from the state level or the government national level. Now it's also the municipality, the EU level, and various government authorities being more active in enacting more regulations. So that is the point I think that we should focus on decreasing, or at least not increasing, the regulatory burden as much as has been done in the previous 5 to 10 years.
Thank you very much, and thank you, Hans-Peter and Patrick. I will leave you to catch your breath a bit, and I would like now to introduce Tora Hansjons, State Secretary to the Ministry for Finance, who will comment on the research report and also give us the government's view of corporate taxation in Sweden. Very welcome to you, Tora.
Thank you very much, and also thank you for inviting me to comment on this very interesting study. I, as many of us have said here today, find it very interesting that this study is formed around smaller companies, as the discussion is often carried out around the larger companies and multinationals. So this is very interesting, and I also find this report, it seems very well executed, and it was very interesting to hear also the comments from the previous speakers. So I would like to go through some key takeaways I take from this study, and in order to understand my key takeaways in this from this study, we need to start a level up. Why are we using taxes as a tool as government and society? And the answer is that taxes are a tool to finance what we as a society need to create a strong, safe, and successful environment. So with this perspective, we look at forming as good policies as possible. And this is very important to understand the pros and cons of various measures you can take in the tax system and with tax reforms. So others in this panel may have a slightly different focus when reviewing this report than I may have. But from this perspective, my takeaways are that the study finds that there are effects, although rather small, in the economic activity of these micro firms when taxes were lowered, and also find that cutting dividend taxation does not lead to more investments. And even if this study is done on the Finnish business, it's highly interesting also for us in Sweden. And this is because we have formed more or less the same path in this area in the recent years, also that the previous speakers both were commenting on. So what have we done in Sweden? I will not start in the 90s, but I will start in 1991. And this is when Sweden made a strong move in reforming the entire tax system. And since 1991, we have had a strong commitment to broad basis, and this is in order to have an uncomplicated tax system as easy as possible. We think this is very important also for companies, that it's not complicated, and also to have low tax rates. And now in 2018, following very many years of analysis, including also international work that I assume have been part of Finland's adjustments as well, a corporate tax reform was launched in Sweden in 2018. And as a result of this reform, the corporate income tax was cut in steps, and the final step was to the current rate of 20.6%. Something that I think is important to mention in this context is that the tax cut that we did in this reform, they were fully financed by broadening the base. So we were going back to what has been the strong commitment since 1991. And it was financed through limitations of interest deductibilities. The aim with this was to mitigate aggressive tax planning, and as previous speakers also pointed out, that it's not as big of a problem today as it has been in previous years, and to also improve the neutrality of the tax system and how we treat equity versus loans. And this means that those who can't engage in aggressive tax planning through interest deductions, for example, or that don't have the tangible assets that the lenders require, they are the winners of this reform. And that would typically be small firms. I think a very important aspect considering today's topic is also the simplification rule that we introduced. And it allows firms to deduct interest up to 5 million Swedish kronor. And this makes the reform altogether very favorable, also both from the rules that small firms need to look at and understand and analyze. So it's simplifying them to have this threshold, but also because they may not have those loans. And also I want to point out that following the reform, the Swedish corporate income tax system is still characterized by general depreciation rules. And when we carried out these reforms, we did not make any assumptions of dynamic effects in the calculations. And our firm view is that this decreases the risk of overestimating the level of self-financing of a reform in a short run. And this is important for a government, and that is of course important because taxes are the way we finance other activities. So as I mentioned, the corporate income tax is an important source of revenue. The corporate income tax revenues have been around 2.5 to 3% of the GDP in most years since 2000. And a great deal of the government's perspective is how we use tax revenues, because there is a mutual dependence between businesses and the society. Businesses, they do create jobs, tax revenue, and growth. And the society, on the other hand, is educating the workforce, providing healthcare for the workforce, making sure both men and women are able to participate in the workforce, providing infrastructure, and keeping society safe. But also, as we all have seen in the last 2 years, sound public finances have been key for the extreme measures that have been taken in order to save jobs and save companies. So we have presented 23 amending budget bills, and we have used more than 380 billion Swedish kronor in 2020 and 2021, and even more liquidity measures in order to save jobs and companies. And also when restarting this society now after the pandemic, we have boosted the Swedish green job revolution with tax money. So through the climate leap, the industry leap, climate premiums, and regional electrification pilot projects. And these are some examples. So what are the conclusions? We do understand that sound public finances are key for being able to meet the challenges. And we do not see that this study gives any reason to deviate from the current government practice to calculate static budgetary effects and not include over-optimistic behavioral or dynamic effects.
Thank you very much, Tora. And now I would like to invite all our speakers into the screen or onto the screen. And a special welcome to Tuomas Matikka. Could you please, well, everybody is coming soon. I will start by introducing Tuomas. He's Associate Research Professor at VATT Institute for Economic Research in Helsinki, Finland. And as have been said already, one of the co-authors of the report. Very welcome to you. And also to Persson, Economic Policy Spokesperson for the Liberal Party. And warm welcome back to all of you. And we will have soon Tora as well in the picture, I hope. And also, yes, Patrick. But now I would like to start, since you are first time on stage. Mats, would you like to give some introductory comments on the report from your reading of it?
Thank you. Thank you for inviting me to this seminar, and thank you for the paper. It was very interesting. And I think my first comment is that I think this was kind of what we would expect, that small firms would not invest more given that you lower the corporate tax rate, because as policymakers we very often when we reduce the corporate tax rate, the whole agenda is that we assume that the corporate tax rate is affecting the destination country choices of large multinational firms, and that's a main motivation behind when we lower the corporate tax rate. I think it was very interesting that after all you find some effects on other behavior for the smaller firms. I think that's very interesting, and it seems like the effect of an kind of like a cash injection, I think you said. I think that's very interesting because as policymakers, our toolbox is kind of limited when it comes to supporting companies, supporting the business environment. It's a very tricky policy, and I think it's very interesting that given that this has low effects on investments, there is other positive effects from lowering the corporate tax rates, and I think that's something I think that's not at least in the Swedish context. I think that's very interesting. So I think this was a very interesting report, and I think there is interesting effects both for the small firms, and also think that this was kind of what I expected, that you would not see the big effects on investments, because we will see that on the larger multinational firms.
Thank you, Mats. Tuomas, would you like to start to comment on what has been said so far by our commentators about your report and its implications?
Yeah, so yes, and first I want to thank everyone for first of all participating this seminar, and everyone for their insightful comments and discussion so far. So and yes, so maybe just to briefly maybe to pick up on the discussion where what people have said before. So maybe just first a few sort of technical points. First, coming to Patrick's comments on causal effects. So this is of course something that we really much focus on in the act, not so much in the report in the sense that we are just summarizing the main results, but in the sort of a more technical research article that's sort of behind this, and sort of everyone interested in this in more detail, I encourage people to check that out. But sort of we are sort of rather confident that we're actually are picking up causal effects here. So there aren't sort of any other confounding reforms going on at the same time. So for example, like entry regulations have been reformed in Finland already in the early 2000s, so they don't affect this kind of a setup anymore. And sort of there are under different significant notable differences between these corporate groups going on at the time of the corporate tax cuts. And also back to Hans-Peter's comments about what kind of investments we are including. So and so I fully agree with you that we definitely need to consider other investments and just investments in like machinery and equipment. But that's actually included in our analysis. So we also include the sort of the long-term costs in a sense that also include the intangible assets, for example, that are not included in that you would sort of install a new machine in your factory, but we also include that if you know develop the software or develop a patent, for example, for something intangible. So that's also included. So, but still don't find any effects on the investments. And maybe third, I want to point out sort of an excellent question on whether there's sort of room for more sort of corporate tax rate cuts in a sense. So in that sense, sort of my view based on not only sort of in our research, but sort of on the broader what has been studied in the literature, also internationally and also in Sweden, I think sort of maybe no. In a sense, I think maybe it's sort of if we want to focus on boosting the business activity, we should maybe think of finding these kind of tax incentives or other incentives that are more targeted in a sense. So in the last point that Mats pointed out, the cash injection, I think that's something that has been really sort of been picking up in the recent literature, also sort of outside Finnish and Swedish context as well. That if you sort of find policies that would increase the available cash resources especially for young and growing firms, I think that's something that would be has been found to be an effective way to increasing business activity for these types of firms. And for the larger firms, in a sense, that what has been found that we should maybe focus more on this kind of targeted incentives if we're talking about the investment margins here, so that we could target these kind of, and again, sort of increasing the resources for investments for these firms that are sort of more likely to invest, in a sense that we should focus on these kind of, those kind of very detailed and targeted like bonus depreciation schemes. But maybe it's just to wrap up, I think we should still need much more evidence on the effectiveness of these kind of bonus depreciation, accelerated depreciation policies. For example, in Sweden and Finland, so we have a lot of this evidence comes from the United States in the literature at the moment. So I think that's something that, and of course, like the tax systems are very different here, for example, compared to US and the UK. So I think that's something that sort of us researchers have to step up a bit and also to study these kind of effects of these kind of policies and how they look like for example, in the Nordic countries. But again, thanks very much everyone for their comments and discussion. Thanks.
Thank you, Tuomas. And Aliisa, would you like to complement Tuomas' response to the comments at this point?
Yeah, sure. I think perhaps I'd like to kind of thank you for all the great comments. I think Tuomas covered most of them. I think I would still like to perhaps underline Tora's point about how, of course, the cutting corporate taxes, there's always this opportunity cost that we actually collect taxes for something. So in my presentation, I was just, researcher excited about our results and introducing them. But of course, you need to put this in a bigger picture, that there is a reason why we collect taxes, and that even if we find some margin shifting, it's of course, it's not necessarily implied that, just cut down taxes further, because of course the public finances that or the revenues that you raise with the corporate taxes, it's actually used for something, and it's especially used for something that small firms use, because the business environment in a country is very relevant, of course, especially for small firms that have to depend on like what is given, that, for example, what kind of education their employees have, and what's the infrastructure, and how the economy is evolving. And of course, these things affect small firms a lot. So I think this, I would like to thank you, Tora, for kind of bringing this up, because this was not brought up in my presentation, and it's really important to keep in mind when talking about taxes.
Thank you. And I would like to come back to that and ask the panel if there are any deviating opinions on this. How important is the corporate income tax as a source of revenue for, well, Sweden in this case? Do you agree with the State Secretary and also Aliisa, as it seems? You may, yes, Mats, please. And then Patrick.
Yeah, of course, the corporate tax rate is important because it's a lot of money. You can see that 2.5 or 3% of GDP. However, everything has an opportunity cost, and it's the same for policymakers. As I said before, the our toolbox as policymakers is pretty limited when it comes to supporting businesses and creating a better environment for small firms. It's tricky policy-wise. It's difficult to know what kind of policies that are efficient. And we know that a lot of things that the Swedish government and the Finnish government are doing is not working, and it's highly inefficient. So I mean, if you want to decrease or cut it of the corporate tax rate, that has you have to compare that to other policies that you are investing in. So I think that's and I think one of the main contributions from my perspective from this paper is that cutting the corporate tax rate is a good policy, both for the larger firms, but it also have good effects on small firms, not on investments, but on other areas. I forgot one thing that I think is very interesting. I would like to ask a question about that. The fact that you find very low effects on the labor costs, is that related to the Nordic labor market model, where there is negotiations between the employers and the unions in the wage setting system? Is that the reason? Would you have another effect in the US context, for example?
Aliisa, would you like to respond to that?
Yes. So thank you for raising that up. Yeah, actually, I think a good thing to keep in mind when talking about the modest impact on labor costs that we find is that as we are studying very small firms, their average number of employees is only 6 employees. So these are actually small firms. So for these kind of firms, I would say that the margin of increasing kind of labor input, so potentially hiring 1 additional employee, is quite a big change to make. So in that some sense, we weren't that surprised that we didn't see anything there, because the firms are so small. And furthermore, this might take some bit of longer time to actually observe something at that margin. But regarding the kind of the stiffness related to the labor markets, this is something that could be one of the reasons there, but it's based on our study. It's impossible to take any stand there for me. Yeah. Thank you.
Thank you. Then I would like to give the word to Patrick, and then I would like to have a comment from the State Secretary, and then after that Hans Peter. But we start with Patrick.
Thank you. Regarding the corporate income tax rate, I do think we can see somewhat of at least a hint of a Laffer curve effect, where there's a cut in the statutory rate, but revenues increase in nominal terms and are at least stable as a share of GDP. And that, of course, has to do with the productivity gains, etc. But that also shows how small countries need to have an analysis about their tax environment, their national tax environment, which is very much focused on international competitiveness. But I do think also that one could look at which firms or the size of firms that are actually paying the lion's share of the corporate income tax in a country. Typically small firms or newly established firms, it takes a while for them to become profitable, to reap profits that are taxable. Our members in the Swedish Federation of Business Owners are typically small firms, and they will not be per firm very large payers of corporate income tax as compared to older and perhaps multinational larger firms. So that would be a follow-up question. Is there any data on corporate income revenue that you have seen that is that is based on or separated on based on firm size?
Aliisa or Tuomas, would you like to answer that before we continue?
So I don't know about the sort of any more detailed data about corporate income sort of revenues based on sizes, but of course, in a sense that there's also, I think the trends are pretty similar in Sweden and Finland, that we also sort of have an increasing corporate income tax revenue as well, in a sense, before the before the COVID pandemic, which also sort of picks up also this sort of more favorable overall economic development behind this as well. But yeah, so it's difficult to say what's coming out of the corporate tax and what's sort of coming out of this general good development too. But it's sort of it's very difficult to study these larger firms. But I sort of agree that we definitely need more evidence of what's the sort of the impact for the larger firms as well, sort of to think about these policies in a more sort of profound way. So that's, I think, my point here. Yeah, but let's move on. Thanks.
Thank you. So Tora, would you like to comment?
Yes, please. Thank you. Very interesting comments from all of you. So I would like to dig into maybe a bit the toolbox that we as a society have to actually create jobs and to form a good business environment. And I do think that, for example, putting money into education is well worth the spending, both school systems and also higher education. I think that is vital for creating a society where you have a good business climate. So if you do look into only the tax toolbox or only like state aid or things like that, maybe the toolbox is limited. But I think forming a society where you have healthcare and an educated population is very important. But also the things that we have been able to do throughout the crisis, I think the Nordic countries, they have all performed well financially and economically throughout the crisis. And I think this has something to do, at least with the toolbox that we do have, that we had actually tax revenues that we could spend also in the structure of our economies. I think also the stabilizators where we have been keeping consumption up through, for example, unemployment insurances and other sorts of measures. And I think also the measures that we are using now to create green jobs, which are part of the society, they are financed through the climate leap and the industry leap, for example. I think those are very important tools that we do have in our toolbox in order to create this green job revolution. It's not only, I mean, there are a lot of companies out there that are doing a lot of the work, but it's part of an environment, and there's a reason it's happening here in Sweden and the Nordic countries, I think. I would also like to comment on the GDP and the fact that the revenues have been stable. One of the points I was making in my first statement was that we have financed the tax cut. So when we did the reform, we actually did well, the first reforms that was done by the former government, they were financed through doing a lot of ways to stop tax planning through interest deductions. So they were not fully financed, but a large portion of it was financed through also the former government. And then when this government lowered the taxes, then it was fully financed with also measures to make it more difficult to plan around.
Thank you. So now I would like to hand over to Hans Peter.
No, I'm unmuted. Thank you. No, just a few comments. From a theoretical point of view, but still nonetheless true. I mean, taxes are brakes in the economy. And do we want higher or stronger brakes than necessary on investments? No, not likely. We can tax to a larger extent the results instead of the investments. And that is particularly true for SMEs who rely more than other larger companies on their own profits for investments. So that's why over a longer period of time, I think the level of the corporate income tax is crucial to the SME sector. So if you want to see more projects take off, then yeah, keep on going in this direction. That's my experience so far.
Thank you. I would like to turn back to something that Patrick said about the regulatory burden and how it sort of presses the small and medium-sized companies, and maybe not only them, but especially them in this context. And I would like to hear both from Mats and from Tora what you are, what you would like to do, or in the case of the government, what you are doing, and in Mats' case, what you would like to do in order to release some of this burden. Mats, would you like to start?
Thank you, and thank you, Patrick, for a very interesting comment. I think this is one of the main problems in Sweden at the moment for small enterprises, and there isn't one big issue, one big reform that can affect that. Instead, you need to have a focus on decreasing the number of regulations on all levels of the society, on the municipality level, but also on the state level. And I think the problem at the moment is that there is a lot of new regulations being implemented from different authorities, but there is no one is taking the full picture and the whole concept, the whole consequences. That's the main problem. So I think there isn't one reform that will solve this problem, but I think it needs to be on the highest political agenda. I think that's the most important thing.
Tora, would you like to comment from the government's point of view?
Yes, I would, and I think this is a very interesting discussion, because you can have the discussion that if we add or take away one rule, then things will be easier. I think that's a simplified discussion, but I do think it's very important to always, when you do measures, that you consider the proportionality, whether it's proportional or not to do something, whether it will help or it will not help. So one example could be some of the very large, the short time work that we have used throughout the pandemic. It has, of course, been burdensome for companies with some of the regulations included in it. But at the same time, we have seen large frauds against the system where there has been taken opportunity of the crisis to get government money. So I think a lot of the measures that we did implement to stop the frauds against the system, they were cumbersome for companies. And then the key here was to have a discussion whether it was proportional or not. And sometimes it is proportional to impose more regulations, and sometimes it is not proportional because it won't help other things too. And I would also in this context like to really stress that the approval rating from companies of the tax agency is very high in Sweden. So companies, it's over 80% of the companies that are actually have a high confidence in the tax agency. And I think there's, of course, a lot of reasons, and the tax agency has done a huge work in order to be a good agency for everyone that are paying taxes. But I also think that one part is that we have had this focus to have broad tax bases that are easy to use for companies and a lower tax rate. So you could have a optimized tax system where you start to try to incentivize various different things that you want to happen, or you can have a broader, easier system. And I think this is something that you need to also consider when you do tax reforms.
Thank you. So proportionality and also those broad tax bases and more general taxation, I presume. So Hans-Peter, what would you like to add?
Oh, thanks. No, I think what Tora just said about the Swedish tax authority is very important, and it should be kept that way because that is worth a lot to a country. And also, having been a tax practitioner for 18 years with one of the major firms here, I've seen that with lower level of tax, less planning, so much easier to fulfill and pay your taxes when the general level is as low as possible. There's less to plan around, less to gain from planning. So general rules and at as low level as possible, I think, is the name of the game going forward here.
That, of course, goes a bit contrary to the idea of making more targeted tax subsidies as opposed to these more general tax rules or tax cuts. Would any of the researchers like to comment on that?
Yes. Yeah, I would like to maybe compare our study to some recent other studies done in Finland lately. So as we found some effect on sales for small firms for this average total corporate tax cut, so that you gained anyway, there was a subsidy for small firms so that they could hire an extra employee. And this was there was a study made by this, and the firms did not really respond to this. And then there was a recent study that studied this consumption tax credit to incentivize consumption of services. And again, we didn't find very strong effects on that. So I think this kind of relates to this also this talk or comments about the level of bureaucracy. So I think for small firms, this is really important that even if you almost give out like free money to small firms, but if it requires a lot of effort from them, like figuring out like what do you need to do to get this money, and how can you kind of qualify for this, and just figuring out all of this, it might reduce the adoption of these policies and hence the effect of these policies. So I think this, as the previous comments raised up, that the level of kind of complexity and bureaucracy in the tax policies might be especially relevant for these smaller firms.
Tuomas, what would you like to say?
Yeah, maybe just to begin on about the simplicity versus targeted stuff. I think that's we have a lot of this kind of, trade-offs in tax policy all the time. So I think that's maybe one of those, in a sense that, okay, so if we would just lower the general rate, in a sense that, okay, now it affects all firms, that if we want to really focus on, for example, on investments, so then we should maybe focus on, so if our goal is to increase investment, so maybe we should focus on how to do that more targetedly. And that might be difficult, and I think it's particularly difficult if you think about this kind of a cash injection story, in a sense that, okay, Aliisa said that maybe like this targeted incentives to hire like new workers, that might be sort of what firms do to hire a new worker, would maybe also what we find in this study would maybe require even larger resources, in a sense, but what would sort of the policy tools be to sort of efficiently increase like sort of available cash resources within firms? I don't sort of have a clear view on that, what would that policy be, but maybe that's something that we, in the future could think about a bit more in a sense as well. And maybe just one final point about the sort of lowering the capital or sort of lowering the corporate tax, in a sense, sort of one maybe view on this is that what sort of we research tend to think about that's also about sort of the corporate tax being sort of a backbone of capital taxes as well. So in a sense that, decreasing the rate to zero probably isn't optimal. So, but what sort of the level would be? That's, of course, a lot of views on that. So that could be justified from many angles as well. Yeah, thanks.
Thank you. Now we have a question from the audience. So even though it's we don't have much time, I would like to let Emily present the question.
Thank you, Ilinca. This question is for Tora from Ulrika Hansjon. In Sweden, the interest deduction restrictions are a heavy burden on corporations, administrative-wise. So to Tora, are there any plans to raise the threshold of 5 million Swedish kronas to the maximum level on EU level of 30 million kronor or to the Finnish level?
Tora?
So thank you for the question, Ulrika. And we do have right now a committee that is reviewing the reform, as you always should do after making a big reform, which this reform in 2018 was. Then you also should go back and review it a few years later. And now we have come to that point. So we now have a committee that is reviewing the corporate taxes, the changes that were done, and I will not comment on what I mean. They are an independent committee, and they will come to a result. So we will see.
And do you have a date for when they will present the results?
I do not have a date for when they will present the results, but it's on the government website, I'm sure.
Okay. Great. So with those words, I would like to thank, firstly, of course, Aliisa, Koivisto, and Tuomas, Matikka for your research report and also your presentation, and all our speakers, State Secretary Tora Hansjons, Mats Persson, Hans-Peter Larsson, and Krassén for this participating in this discussion, and for all of you in the audience. And before I let you go, I would like to recommend an upcoming seminar here at SNS on the 22nd of February, that is next Thursday, about the latest news regarding how the UN guiding principles on business and human rights are shaping legal developments and market expectations. You can read more about that and also register on our website. And I also would like to recommend our executive education program, and for that I will turn to Swedish, since it is in Swedish, and it's called Samhällsprogrammet. Och det är inte bara i Sverige, utan det är både i Sverige och i Bryssel. Och man kan säga att det är en crash course, en väldigt intensiv kurs för er som vill lära er mer och fördjupa era kunskaper om hur Sverige styrs från lokal till regional till nationell nivå, och även EU. Den äger rum i höst, varje höst, men närmaste tillfället är ju nu i höst. Och om ni vill veta mer om det så kan ni kika på vår hemsida eller kontakta projektledaren Agnes Gunnarsson. Och med de orden vill jag tacka för idag och önska er på återseende till SNS.